Hey there, speculators. It's Rod, your Futures Fanatic. Welcome back to the channel. Futures Fanatic is part of Traders Dev Group. That's my company where I provide education for active futures traders and self-directed investors. I think you're really going to like the video today. It's a longer one, but it's a longer form content. It's an interview with the founders of TradeDay. TradeDay is a new entrant into the online futures funding space, and they're doing things a little bit differently. So a couple things I wanted to highlight before we jump into the interview. First and foremost, that here's the first and last names of the folks I interviewed, James Thorpe and Steve Miley, both blokes from the UK. And so you know who they are and where they came from. That seems to be a concern for many people on my channel about the background of people that are setting up these companies. So lots of transparency there. They also support Tradovate and TradingView right from the jump. That is their preferred platform. It's the only platform they support right now. But as you'll hear in the interview, NinjaTrader is coming very soon, as well as some very cool integration with NinjaTrader. So, but right now, if you know, you know, and if you like Tradovate and TradingView, you have another alternative to TopStep and another firm that I interviewed here, Elite Trader Funding. So you can use web-based and mobile if you like that. You also get access to Jigsaw, Live Squawk, lots of research, education. As you'll hear in the interview, they're really doing things a little bit differently. They have two programs right now, just beginner and advanced. You can only buy one. That is actually to your benefit. We talk about the simplified rules that are a little bit on the conservative side, but here's why. Because they put you right into live markets once you pass. Also, as we get into in the interview, the profit objectives of these programs are lower than they are at other firms. I believe it's 2,000 in the beginner and 4,000 in the advanced. In other words, you're given a good risk to profit objective ratio with lower profit objectives, and we get into that in the interview. But once you are live, you are really live. So because of that, there is no waiting period for a withdrawal. Okay, we talk about in the interview that it's generally suggested to grow your account and take your time. We talk about that on the Futures Fanatic channel all the time. However, it's your money, and if you'd like it, you have access to it essentially right away. You can find out all about how TradeDay works by please checking out the FAQs up here at the top. But if for some reason there is something that we don't cover, or you want to interact with me or the founders of TradeDay, they will monitor the comments as well and you're welcome to leave a comment down below. In fact, we encourage it. And then finally, all of the timestamps of the interview, because it does run a little bit long, are also in the description down below, as well as the code TDG35 to save 35% off your lifetime subscription to either of these two programs, okay? And as we talk about in the interview, TradeDay is not going to be one of these discounting shops for a variety of reasons. First of all, they're putting you live and they're giving you access to your profits essentially immediately. And for other reasons, they're looking to establish a firm that's doing things a little bit differently. So they're not going to be a deep discounting shop. Not that these fees are outrageous by any means, but 35% is probably very likely this exclusive deal with TDG, one of the lowest ways you'll ever be able to get involved with TradeDay. So take advantage of it. It's going to go from this Sunday when I post this interview to next Sunday. I'll put the dates right up here. And that'll be about it. Enjoy the interview. Remember, all the information down below in the description below if you do have a question or need to access these links. We'll see you on the other side, as they say. Enjoy the interview. My name's Rod, reminding you to stay green. Trade like you mean it. Thanks. All right, super. Well, thanks for joining today, guys. So as I mentioned, joined today by the founders of TradeDay, a new entrant into the online futures funding world. I know that many of you have been asking about interviews with founders and understanding the background of where these folks come from and the company. So that's what we're going to be doing today. So welcome to the Futures Fanatic channel, James and Steve.
Thanks, Rod. Thank you. I think before we get started, I just want to say thanks for having us. We're big fans of your channel and the work that you do. You're very direct, and that's what we like to see in the advice section of the industry. But shall I kick off, Steve?
Yeah, go for it.
So my name is James Thorpe. I'm the co-founder, one of the co-founders of TradeDay. I've been in the industry, futures trading industry, for 30 years. That's a long time. I know I don't look that old, but I got started in the early 90s. And then went on to work for Cargill. So 4 years broking, and that's actually where I met Steve in 1992. Steve, was it? I think.
Yeah, I think so.
Yeah, but I didn't make my first trade until 1994. There was a small startup in London called GH Financials. It was owned by a gentleman called Gideon Hirchton, and he was building a clearing company and backing traders. And I was one of the first traders he backed. And so I started in April 1994. and then went on to trade for 15 years. So I started on the trading floor, what we call like an independent trader, a local, but I was trading Gideon's money. My wife was a trader. She was quitting. And I just happened to be offered a job working for the exchange. And how that came about was they approached me and said, we're looking for people to sort of fly around the world and talk to traders and trading groups, hedge funds and banks about our products with the mandate of trying to increase volume into the exchange. And I just kind of said, let me get this straight. You're going to fly me around the world business class, put me in 5-star hotels and talk to traders about trading. I do that for free on a Friday night down the pub. Where do I sign? So I joined Life, and that was in a business development role. It was about 40 traders when I got there, sort of barely breaking even. And over 4 years, we grew that team to about 150 traders and profits north of 10 million. By this time, we were a medium-sized multinational, trading around 250 to 280 million contracts a year, 700 traders. About 30% of our volume was algorithmic. The 70% was still sort of point and click manual trading. But that role was in Mauritius, which is a small island off the coast of Africa where we were headquartered. And so I went home that night and said, Tara, we're moving to Chicago, just via Mauritius for a few years. And we ended up living in Mauritius for a 2-year contract. And then when that was over, and Gideon said, where do you want to go? And I was like, Chicago. So I was finally able to fulfill that sort of promise to my wife that we would end up in Chicago. So that's how I ended up here in 2016. And for the last sort of 5 years, I've worked for a couple of smaller trading groups, Clear Capital Group, the most notable of those, which is a Chicago proprietary trading group, mainly market making. And they have a significant offshore business, which I helped them develop and build. And that was November 2019. And when COVID rolled into town, they pulled that investment, and I found myself trading from home on my own as a retail trader and thinking, wow, this is quite a sort of a lonely existence. And that really was sort of the genesis of starting the TradeDay idea. But I'll stop there because I think we're going to get into the meat and bones of TradeDay, and I'll pass you over to Steve.
Yeah, but before Steve takes the mic there, I'll say that anybody that has ever said that these firms are not transparent, or you don't know the background of the founders or where they're at in the world, well, we're solving that today, right? So you have two very experienced guys, some that actually have a little gray as well. Let's hand it over to Steve to tell us a little bit about. Steve, you come, I believe, from an investment banking and finance background.
Yeah, more from that background. And so, yeah, thanks, Rod. Yeah, so my background was, I came straight from uni, actually. I studied economics at Oxford University and was going around the investment banks trying to get a role. And I ended up actually on the Life floor, which still is, but then was a physical exchange. Still exists as an exchange, but was a physical exchange then, like the CME and the Board of Trade, and it was the largest one in Europe. And that's where I met James. We were both working at Cargill Investor Services at the time. James then went on to trade, and I segued across into a large investment bank, which was Merrill Lynch, which obviously now Merrill Lynch Bank of America, late 90s, early 2000s. I segued across within Merrill Lynch into a research background, and I'd used like technical analysis a lot in my trading and my broking for many years. And so I moved into the research department and then pretty much fully became a technical analyst with Merrill Lynch, and was mentored by a great guy called Tom Hobson. He's well known in the industry, sadly passed away a few years ago. And then I was there till the global financial crisis, and I was a casualty of that at Merrill Lynch, probably a blessing. And then Bank of America came in, and then I was...
That was the worst. That was terrible. Sorry to interrupt. I didn't know you were from Mother Merrill. That's where I started too.
Oh, right.
Did you ever go to the Princeton office?
I didn't. No.
Oh, you never had to Princeton. To this day, I believe I still have the record for most amount of assets in LOS 2 or lower, length of service. That's what it's called, because I signed up one mega billionaire in a story that we'll tell another day. But I didn't know that whole financial crisis, to watch what happened with. I guess they survived, but the fact that they got that dumb Bank of America thing, I almost wish it wouldn't have happened. They would have gone the Lehman route. So anyhow, I didn't know you were also that's how I cut my teeth in the Beverly Hills office, cold calling ladies trying to sell municipal bonds.
Right.
Wow.
So I was a casualty though of the financial crisis, but for me it was for the best. I ended up going to Credit Suisse, And I worked there for another 3 or 4 years, again, in technical analysis in the research department. I headed up we had a big technical analysis department. We had like 10, 12 people just doing technical analysis at Credit Suisse, which was large for an investment bank. So, yeah. And so in the last 10 years, what I've managed to do, though, is add various strings to my bow, one of which is on the education side. So I was educating anyway, whilst I was at Credit Suisse and Merrill Lynch, Bank of America, either clients or graduates or doing internal educational stuff. So I've added that in, and for an academy called the London Academy of Trading for some years, and then actually helped set up an academy in London called the London School of Wealth Management, where we were teaching trading, investing, and the like, across from beginners through intermediates, even some people who are fairly advanced. We had courses at all different levels, whether it be option trading, whether it be pure technical analysis, or right for the very beginning, what is a stock, what is a bond. So I've taught kind of at all different levels, and education has become a passion, something that I never thought that I would really enjoy, but something that I really have embraced over the last 5 to 10 years. And so, yeah, and then more recently, obviously, we're doing the similar kind of thing, and that's part of what's gravitated me towards James and I coming back together in this business, having started really our careers almost together, and now, as you say, with the bit of the grey in the I'm not going to say the twilight of our careers, but certainly towards the autumn. We'll say the autumn of our careers. We've now, or the fall. Sorry, it's the fall in the US, isn't it? Sorry, yeah.
Yeah.
So the fall of our careers, we're back together, running TradeDay.
That's great. Well, so there you go. Clearly, two guys that are green behind the ears. So that's what you got to deal with here. No, so obviously, lots of background. So how would you guys say that the background that you've had influenced how you set up TradeDay, why you set up TradeDay, and kind of what you want to be known for in what's frankly a very increasingly crowded online futures funding space?
Yeah, well, I'll kick off there. I think I'll tag James in on this. But I mean, really for us, James was the founder. I came on a little bit longer down the line. But for us, as James has already said, when you go into that retail world, and it's something that I haven't been in this institutional world, but more dealing with retail clients and the whole semi-pro, semi-amateur, pro-tail, whatever you want to call it, trader. Having dealt with them over the last 5 to 10 years and experienced it from my own perspective, and James as well, we realized there was a real gap. But no matter what level you're at, I've worked at big investment banks, and the guys at investment banks, they all think that the hedge fund guy's got something over them. Everyone thinks that someone's got something over them. But I think genuinely, for the retail trader, the semi-pro, say whatever you want to call that kind of that echelon that we're talking to now at TradeDay, they have a genuine grievance that they're not getting the information, they're not getting the education, they're not getting the mentoring that is available to either investment banks or for the actual pro trader. And it was something that we were and having done the teaching from my own perspective, and James has mentored, it's hundreds, maybe into the thousands of traders, in his various roles. It was something that we realized there was a gap in what was being provided between giving real kind of education, mentoring, and giving that extra level even if it's only a psychological reassurance, to give the retail pro-tail trader something more than they were getting from what was out there on the street in this space. And so that was part of the drive. Another thing we really were passionate about as well was being aligned with the trader. We are looking for those. I think there's plenty of diamonds out there in that rough, and we are looking for those guys, and we want to be aligned with those guys. And we don't really feel that some of the competition is fully aligned when they go from something we'll probably touch on, and James will talk about a bit more later, but they're fully aligned when they get that transition. And James talks about this a little better than I do, but the transition from the simulation to the live environment is a big hurdle to overcome, and we don't feel there's enough guidance and mentoring around that, and we really try to provide that. So we talk to our clients and our traders once they take that step, and we have calls with them, and we're trying to nurture them through that step. And then the other thing is that with that alignment is also the fact that we go straight from sim to live, right? So there's no kind of delayed live or sort of semi-live, or what some of our competitors like to call it. Once you're live, And that is our money. There's not a third-party funder coming in and funding. That is James and I's funds on the line alongside you. We have 100%, we're aligned with you succeeding because you win and we win. And if you fail as a trader, we fail because it's coming out directly out of our pockets. So we felt that this was a kind of a gap in the space. We felt that it was something we were kind of quite passionate doing. We're trying to do it from we're here to make money, right? We're running a business, but from a moral, ethical kind of basis, you can teach this stuff. I don't know when it was it 70s or the 80s? The turtle experiment showed, right, that it can be done. That you've got to have the right baggage with you. But if you've got that right baggage, you can get to the point of being successful at this. And success doesn't mean making multi-millions. We're not selling a millionaire lifestyle, right? But we do believe that you can be nurtured if you're the right person with the right skill sets into the right place. And we didn't feel that necessarily all of the incumbents in this space were doing that. And it's something we were quite passionate about doing this.
I agree. If I can just jump in there very quickly, because I feel like, it's important to say that this stuff can be taught, but it doesn't mean everybody will be successful. We want to be absolutely clear on that. It does take a certain type of person to succeed. And that's what, the evaluation process is about, is like looking for these types of people. But just sort of stepping back a little bit to your original question, Rod, what was it about our experience and things? And what did we see? I mean, Steve covered most of it, but just a couple of other small points. I seem to, when I was first coming across this like SIMTA funded industry, I felt there's like a lack of transparency. Some companies were hiding behind Delaware shell companies. Some people were calling themselves traders, but you didn't know who was running the company. Some people were funding you, some people weren't. Some people were passing you off to the funding partner. And I'm like, well, how does that align the trader with the prop firm? So we felt like if we can't do it better, at least we can do it differently and offer a different experience. And then the next was that experience of being without work during the pandemic and the start of the pandemic and thinking, well, sorry, I'm going to pick up my trading and start and do some trading, really kind of brought it home to me how isolated you are as an independent trader at home. And I felt like there was a vehicle that we could create that we could help deliver some of the advantages that we had as professional traders in professional trading groups to the retail trader at home. And whether that's like the quality of research we can give, the market commentary, which we think is really crucial, understanding what's coming out in the daytime, preparing for that, and then having a 24-hour commentary service of what's happening, breaking real news, breaking times, rumors, anything that could potentially drive price. Those type of tools that you find in a trading group aren't really available to you as a trader at home. Or if they are, you have to buy them yourself off the shelf. You have to select which one's the best ones. You don't know that. We've done all this. We've curated this. We've implemented these tools into our professional trading groups. How can we deliver some of those to the traders at home?
Yeah, so it sounds like, James, you started it and then Steve joined. You guys knew each other from the past. Did you set out to say that you wanted to serve a specific part of the market? Like, do you think TradeDay is better served for absolute beginners that don't know futures? Or did you guide it around a different market segment? Or how would you describe that? Who's your ideal trader based on all the stuff that you offer that definitely differentiates you, that we'll get into throughout the interview?
It's a really good question, because this has been as much a learning process for me. I come from the professional trading world. I was managing a professional trading group and another one here in Chicago. And switching to the retail side has been a whole huge learning experience for me. Thankfully, I've got all my experience bringing me with it, so I can see what's going on and formulate how we want to appeal. But who is our customer? It's a kind of a good question. I thought, honestly, that we would provide a platform that would appeal to brand new traders. We would teach them from the beginning, and this is how we create the foundations of becoming a successful trader. And you show us some skills in our simulated trading environment. and we'll take a bet. We'll take a punt on you and put some money in a trading account. What we found is actually most people coming onto the platform have experience in this. We have inexperienced futures traders coming onto the platform. And I think that's largely a result of doing some advertising in Europe, where the CFD market is very dominant and popular. Yep. So we have people that don't understand the role, for example, and listed liquid months.
And so now they have to trade actually regulated products where the tick is the appropriate tick. You know?
Yeah. So we do. They are new to futures. We have that. But I would say the majority of our customers have some experience. And what I'm surprised about is the amount of people that are joining us from been or are with other trading groups, like us, like SIMTA-funded trading groups.
Right.
I guess, like I said, it's a learning experience for us, really to understand who our customer is and what we need to provide to them. But one of the things that, when I was sort of investigating what we want to do, talk about this another time perhaps, but took a big step back and thought, what are the emerging trends at the start of COVID? More people at home, more people with time on their hands, more people looking for opportunity. Where was I most successful and what did I enjoy doing the most? Well, I think that was at Mercury Derivatives in Shanghai, actually hiring traders, mentoring them, developing them, building them. How do I marry those two together? And then came across the SIMTA-funded space and then developed our business within that sort of vertical. So that was kind of like the genesis of it, and really we continue to evolve it to meet who our customer is. But really, if you'd asked me at the start of the process, who was it? I'd have said new traders, and it turns out it's not. It's people with experience.
Although, let me just chip in just real quick on that one. I think there's something else to be said there, that even though a lot of these people, what our experience have been, and we're kind of high touch with a lot of our clients. And what we have found, certainly I've found in email conversations and actually calls with these guys, is that there's a lot of people think they know what they're talking about. And a lot of these guys are self-taught. They've learned from your world, the world of YouTube, the world of social media, the world of online. And as much good stuff there is out there, there's a lot of not so good stuff, being polite. And
well, also, Steve, they only watch the first 1 minute and 53 seconds.
We lost your audience.
I don't know why. I've contacted other really popular YouTubers like, oh no, you get 2 minute view times. That's good. So not only do they only watch the whole video, if they watch the whole video, they would hear from me constantly telling them that this is how things work.
I hope we got a good proportion of your audience still with us.
Oh no, I know, but sorry to interrupt there, but you do find that there's a lot of folks that feel they have far more experience than they actually do, right?
Yeah, and they probably have a lot of knowledge, but whether they have the correct knowledge, whether it's been shown, whether they've been taught correctly, and it's the application of that knowledge as well, right? Just going to my TA world, you can draw a trend line, right? Oh, this is what a trend line is. You want the third magical touch on a trend line. But the reality of trading is that those are few and far between, the actual magical touch to the tick. And it's, what do you do if it breaches the trend line? What do you do if it doesn't quite make the trend line? And that is a whole different way of teaching, of actually in real life. And that's what I think we'll talk about a bit later maybe. But what we give with, our daily webinars, I'm on there saying, here's the trend line, but it's not quite there, but that's as good as a third touch. And now it's rejected that trend line, then that's an important signal in its own right, even though it hasn't gone to that point. So, and we feel that there's a lot of extra value of education and strategy around strategy and trading that is beyond what is in a YouTube video, or maybe just on the surface of reading an article.
Right. And it's so great to hear. I wasn't aware that wirehouses like Merrill Lynch and others had large TA groups. So that's good to hear. Typically, you think that they're just HODL, hold on for dear life, build a portfolio, and diversification and kind of stuff like that. A lot of traders probably don't know that most technical analysis comes from the futures markets, actually. It's all futures stuff, because futures trade 23 hours a day, and you're not just dealing with a limited period of time that you have in the stock market. So all your Bollinger Bands, all your stuff, those are all futures traders, everybody. It all comes from futures. Yeah. So,
well, actually saying that, just to say my nerdishness, candlesticks obviously come from hundreds and hundreds of years ago. And that's from the rice futures markets, right?
Yeah.
From Osaka in Japan. So
Many of the candlesticks, including Renko, which is Japanese for brick. So those come from Asia. Yeah. All right, let's shift gears specifically into your actual program. So you
Sure.
guys have an evaluation process like many of the firms, and you have these two programs right now, what you call, I guess, beginner and advanced.
Yeah.
And they have a daily loss limit, a consistency rule. You also have some scaling requirements in terms of contracts. So that's going to put you on a little bit more of the conservative side as opposed to some other firms. Why did you set up your program that way? And maybe you could talk about the benefits to participants to have that sort of structure.
Yeah. I'll take this one, Steve. It's really, where to start. If you think about it this way, I've been trading since '94, so I've witnessed hundreds, thousands of traders come and go. Many been more successful than me, many more, as I said, come and go, and I've managed traders since 2010. And I can tell you the biggest reason why people blow out is they blow their trading account through over leverage. And they usually, for new traders, they haven't had enough time to acquire the skills necessary to become a consistent, sustainable, profitable trader. But even for experienced traders, and you see this all the way through history and through, like, certainly big whales blowing up in hedge funds blowing up, it's all the same thing. It's over leverage. And so when we were looking at the business and formulating our SIMTA funded experience, we didn't do it in a vacuum, right? There is a whole industry around this. And in order for us to compete and for people to buy our product, it has to look somewhat similar. But we were like, why are people giving 10 lot positions, the maximum position, 10 lots on a $500 account? Because they want it to blow up. They want that person to buy a reset. Because if you think about it this way, I live on a street, it has a speed limit sign saying 30 miles an hour. And the reason is, if that wasn't there, people would speed down the street. And it's the same thing with trading. You want to be able, certainly when you're developing traders, you want to be able to protect them from themselves. Give someone 10 lots, they'll trade 10 lots. And to be quite, in our beginner program, Rod, it's a $500 daily stop. And we give people 2 lot maximum position. And to be honest, 2 lots is over leverage, particularly in something like the NASDAQ for a 500 daily stop. But, you know, there are traders that are coming onto our program with skills that can handle those 2 lots. But it's like kind of insane to think that somebody should have more on a 500 daily stop, and we do 4 lots on 1,000. So we felt like that was the right approach. That gives help protect the trader from themselves, give them enough opportunity to trade and not sort of blow these accounts so quickly, and start to acquire the skills and experience necessary in order to sort of start gaining momentum in their trading. So that was really why it does land on the conservative side, but for us, we felt that was like super important that, well, I mean, based on our experience, this makes sense.
You're ripping a page from my hymn book. I mean, we probably won't have time to get into it today, and it's a little inside baseball, but I create a lot of content, and maybe you guys could be the first ones that actually adjust the notional value down to something realistic so that it all just makes sense. Yeah. I mean, just call the notional value 5,000 or 10,000, right? So
can I just say on that?
Yeah, if you want to comment on that, because I know you need to frame the program you mentioned so that it's familiar. Otherwise, you can't just be way out in left field. But we know the folks in Chicago that started this space. We can mention my name, Top Step. Yeah, everyone has essentially framed it after that, and they started on the wrong foot with showing these large notional values that are not realistic.
So as Steve mentioned earlier, I started it, I incorporated the company, and actually the original relationship with Steve was like, hey, Steve, I want to provide real good quality research. Will you provide that on the platform for me? And he's like, yeah, I'll do it for free until you're up and running, and then you can pay me. But he had like a front row seat to the development of TradeDay. And then when the opportunity came, he basically from day one was like, I want to be part of it. I want to be part of it. And he came in and joined us. But I was shown in the website, and I was shown in the industry, and I didn't have notional values on the accounts because I'm like, what is this BS? 50,000, 100,000. We're not putting $50,000. We're not giving a trader $50,000 to lose right? That would be absolutely insane, right? We would be out of business on our third trader.
You're not even giving them 50,000 at initial margins at the most conservative IBs, right? So
right. So why have these numbers? So I had them at zero. An account starts at zero. That's how it starts. A professional trading group. You walk in, you go on the simulator. I mean, obviously they all do it slightly differently, but your trading account starts at zero, and it's up to you to build it. So and then Steve's like looking at it, and Steve has much more experience than I do in the retail space, as he talked about. And he's like, James, nobody's going to buy your product. Nobody's going to buy it, unfortunately. So he was the one that talked me into designing the website to look similar, or designing the programs to look similar to others. But we try and be transparent with that on our site. We say, like, this is buying power, and we have a link to what is buying power and what is margin, and we explain margin and things like that. So we try and be transparent, but at the same time, as I said, when we developed the business, it wasn't in a vacuum. There was an industry that we had to compete with, and we have to have a product that people won't say, oh, their accounts start at zero, but Top Step start at 50,000. I'm going to go with Top Step for that's a bizarre reason to make the decision on. So that's why it looks like it does on the notional values.
Gotcha. Well, I mean, I'll point out that, again, you're preaching to my choir, which is that I would say at least half of my content is based on the idea that if there's any deficit in these programs, it's that futures are already highly leveraged to begin with. And the buying power that is extended relative to the parameters. So there are a lot of people that are watching this that will say that they like the fact that many firms have moved towards very, very few rules and keeping it simple, right? But I'm here to tell you that very experienced and understand how to operate within those frameworks, you are going to struggle a lot more than having these imposed. And one last point I'll make is that if you have a firm that doesn't have a daily loss limit, TradeDay has one, you need to impose your own anyway. Okay? You need to impose your own anyway. And it should actually be half of what the firm allows, or 10% if they're allowing a full drawdown. You have to impose, because your only job as a trader is to be a risk manager. That's really it. Is to
actually, you've just sparked a thought in my mind, Rod, which I think is useful trading advice. Nothing to do with TradeDay that I can impart to your traders. What we see is that we give people on the beginner program a 500 daily stop. We see people trade to that. Some people obviously break in, buy a reset. Some people stop. But it's almost like, just because we've set that level, it doesn't mean that should be their daily stop level. Their daily stop level should be based on what they're capable of making. And like when you set out trading, what you should always sort of aim to do is try and risk manage yourself to the amount that you can make in a day. So never lose more in a day than you can make in a day. And that way, as a day trader, certainly, you don't get damaged psychologically on big losing days. So you come in on Monday, for example, let's say you're capable of making $300 on average when you have a good day. If you come in on Monday and you lose $300, well, when you come back Tuesday, you're like, okay, I just need to have a decent day and I'll be flat and then I can make money Wednesday, Thursday, maybe scratch Friday, end the week up. But if you lose $800 on Monday, you're like, oh, I've got to have like 3 good winning days in a row just to get flat. And we know it doesn't work like that, right? You have a good day, then you maybe have a scratch day, maybe you have a small loss day, or maybe you have a medium day, and you like work all week not to make any money. And it's really damaging psychologically. And what it does, it pushes the trader into a place psychologically that's not conducive with making good, impartial, balanced trading decisions. They start gambling, trying to get that loss back. So it's been really interesting for me to learn how the retail trader approaches trading, certainly on an inexperienced level, and like, okay, TradeDay give me 500, I'll just trade to 500. If I'm having a bad day, I'll just keep going until I've lost 500. And it really, like you say, should be a self-imposed daily stop based on what you're capable of making.
Yeah, I mean, the topic I talk about all the time, which is also emotional capital. Emotional capital is as important as your actual capital. That's why
confident P&L we call that.
You cannot trade strategies generally that have less than a 50% win rate. Yes, you talk about the turtles that can have a 20% win rate. It's a completely different style when you're day trading. And you have to think risk first, because the other thing is just psychologically, pain feels 2 times greater than gain. Sometimes in some people, new studies have shown 9 times more. So when you talk about capable of what you're making, that's a great concept, because it's something that I'm probably going to steal, because we talk about a risk budget, and we say in our room, in our trade groups, are you within your risk budget today? On the downside, if you are, you have a small red day. If you're at or near it, you have a big red day. And then your big days have to do with whether you're inside your risk budget on the profit side or double your risk budget on the profit side. Because here is the truth of trading. Everybody knows how to average into losers and get close to their drawdown. The hardest thing, I've been trading for 27 years, and I will tell you the most difficult things to help with situational fluency and trader development is how to get bigger into winning positions. It's almost impossible. People don't know how to teach it or trade it, how to add in your long position at a higher price. No one does that, right? So big days are super hard to come by, which is one of the reasons that you need to keep your unprofitable days very, very manageable, because you are going to be capped on your gains too for a long period in your trading career until you eventually develop. We do it based on strength of signal, times in which you have to be bigger because the confluence of events say that you need to be bigger in that position. But that's really hard to teach.
Yeah.
So
I completely agree.
Okay, great. Well, one of the things I definitely want to point out about the rule set is your profit objective. Okay. So one of the topics that I talk about a lot is people are asking me, which program should I select? 50,000, 100, 150, 250, 300. We just talked about the silliness of the notional value. But what I point out is, well, what is the profit objective of that program relative to the amount of risk that you have, essentially the size of your account? And in your case, your beginning programs, I believe, have a $2,000 profit objective with a $500 daily loss, but $1,500 total loss. And 2,000 is substantially lower than the profit objectives elsewhere. And your 100,000 is 4,000, which again is substantially lower. So I just wanted to point that out. Maybe you guys can comment on why you decided to do that, but that's a very reasonable profit objective.
I mean, it remains to be seen if we've got it right, through the data. But I would say this, when we were formulating it, it's important that traders understand, just because you can make money on a simulator doesn't mean that you have the ability to make money live. And when we're evaluating traders, what we're looking for is the potential. And what we're also looking for is people that are committed to us on trade day. So the fact that they join us and pay a monthly fee is part of that process. But then how are they approaching their trading? So I guess what I'm trying to say is this: you can leave someone on a simulator for a long time, but it's not really going to help them when they go live. And we wanted a profit target that gave us enough information to see that, okay, this person has some skill. It's worth us placing a bet on them when they go live. But at the same time, we don't want to drag that process out, because it really doesn't tell us anything more. So that was kind of the reason why we went quite conservative on the profit target, if that makes sense. We really just kind of like, I mean, it's not an easy profit target to get unless you do have acquired some skill. But what we need to know really is how you're going to cope with the biggest challenge that traders face, and that is the sim to live crossover, that psychological challenge that is very real and is extremely underestimated by all traders. Everybody thinks that if they make money on the simulator, I can map that and replicate it into the live market and make money. And it's just simply not the case. So we're like, okay, this trader has skills, or has some skills, some ability. Let's get them live and let's see if we can help them cross that chasm and start to become a good trader, and obviously then scale them and get a return on our investment.
Right. So you launched with these two programs, and the earlier part of the conversation talked about your background and why you started this and how you're differentiating yourself and what your objectives are for the program. But how about the concept of really a progressing with the firm? Is there an idea later on that, and we just discussed that notional value is silly and you start at zero, but as you build from zero to something, can you grow with TradeDay beyond your original buying power or the evaluation that you went through?
Absolutely. So the way we approach it is depending on which program you graduate from. So if you graduate from the beginner, we map that daily stop, the maximum trading drawdown, and the risk limits to that account. And the same with the advanced. So in the advanced, for example, it's 1,000 daily stop, 3,000 drawdown, and 4 lot open position maximum. But as you grow your trading account, for every $1,000 in your trading account, we automatically add 1 lot, and that will fluctuate based on account withdrawals or account losses. But as you grow your account, there is a transparent way that we scale the risk on the trader. And of course, for us, we want to see a return on our investment, the time that we're putting in nurturing that trader and building them. So what typically happens in a normal professional trading group is once a person's sort of making money and they're growing, they're building their trading account, you're giving them more risk. You might give them even more risk to help them sort of grow faster and leverage. But at the same time, obviously, you're managing that because you don't want to put them in a position where, as we talked earlier, they're massively over leveraging and they've got $20,000 in their account and they run the risk of losing 10 in a day. And then, of course, it's like have one more bad day and you've blown up. But you've got to still manage that growth. But we have the capital there and obviously the skill and experience to sort of like, okay, this trader's doing really well. They've got 10,000 in their account. Their limits are 12 lots. Let's get on a call with them, see if they're interested in trying out trading 15 lots, for example, and we can add that capital there. So that's kind of like how we plan on growing and scaling them.
Great. Well, so now we should probably transition into something that's really important that you guys have both hinted at, which is that TradeDay is a sim to live model, not sim to sim live. It's a sim to live model. Yeah. So we talked about the rules. We talked about the 2 programs. You can grow when you're in the live environment, but tell us a little bit about the ways in which people can withdraw profits. Do they need to have a buffer? From looking at your website, it sounds like if you earn the money, it's yours to take when you'd like. Yeah. Maybe you can explain the parameters of how your profit split and your funded trader program works.
Yeah. So again, keep referencing this. We built TradeDay not in a vacuum. There are other people in the space. If we were the first to it, believe me, we wouldn't be offering 80-20 splits. I know this, Rod, but for your audience, if you were to walk into a professional trading group in Chicago, London, Singapore, anywhere in the world, it's likely your percentage draw would be 20%, not 80%. Certainly in the big DRWs and jumps where they're providing a lot of infrastructure. But even in the sort of more manual point and click trading groups, if you wanted an 80% split, you'd have to put up $250,000 in first loss capital at some of the bigger trading groups. So our split is in line with the industry at the moment. So we give the trader the first $5,000 they make and then 80% thereafter. And we don't have any restrictions on withdrawals. Now, the reason why we don't have restrictions is because we are funding people and they've made, if they want to withdraw, they've made that money. It's in a trading account. It's not like a SIM account that we have to now write a check from our own balance. They've made that money in the trading account. There is one small caveat, or 2 caveats, I would say. The first is this: we do pass on bank charges for withdrawals under $500, and that's to stop people taking $50 a day. Like we're getting dinged on bank charges. So, but anything above 500, we'll actually cover those bank charges. And then the other caveat is that risk limits will be adjusted after. So if you're up to $10,000 balance, you're trading 12 lots. Because you graduated on the beginner program, I think it would be 14 lots if you graduated on the advanced program, and you withdrew 8,000 out, then we would reduce the maximum position size that you could trade to reflect your new account balance. So those are the 2 sort of caveats. But aside from that, you can withdraw profits anytime you want. But what I would say is this, and again, another sort of opportunity to really impart some of our experience on your audience outside of like telling you about TradeDay. The only way you're ever going to be a successful trader is to grow your trading account balance. And I know traders that made $1 million, $2 million a year as day traders, professional day traders, but they had like $2 million in their trading account. You can't make that sort of money with $10,000 in your trading account. And very early on in my career, Gideon was my mentor, and he very sort of sage advice he would impart on me. And one of the things I remember he said to me once was like, grow your trading account, James, grow your trading account. He goes, if you're taking on enough risk to lose $10,000 in a day, and you have $100,000 in your trading account, you lose $10,000 in a day. The next day when you come in, you have $90,000 in your trading account. You can carry on trading. It doesn't affect you psychologically. If you've got 20,000 and you lose 10, the next day you're like, oh my God, if I have another losing day like that, I'm blown out. I've lost my funding. I'm out of the firm. And it changes the way you trade. So it's much easier to trade. The more money you have in your account, the easier it is to trade. And easier in inverted commas. It's not a function of, okay, I'll just put 100 grand in an account and I'll find it easy to trade. That's not it. No. It's that your trading balance is a function of your skill acquisition and you growing your ability to trade bigger risk and take on bigger risk limits and manage those days and those losing periods when they come. And they come for everybody. They come for me. Like we've been trading 26 years. And I go through losing days, losing weeks, that bad period. It gets dark for all of us. And you need to be in a position financially in your trading account to be able to sustain these losing days, these losing weeks, these losing months, God forbid. I actually had almost one losing year at one point. And the only way you do that is building your balance. So we do a lot of work with traders to encourage them. You're coming to our platform to trade our money, to scale, to become a really good trader and make a really decent living out of it. But that takes a lot of work, it takes a lot of time, and it will take some sacrifice on your part. And what that means is when you make $2,000, don't draw out $2,000. At the same time, we get it. People are keen to recover some of their investment in the program, and maybe they have financial obligations at home that they need to meet. If that's the case, fine. It's your money. You made it. You can take it. And that's our philosophy.
I love it. I mean, I think so. Anyone whose complaints are around payout periods, this is your new home here. But as James said, you need to be super realistic about the amount of time and effort that it takes to develop this skill. Trading is a skill. Managing risk, producing risk-adjusted returns is very, very different than just trying to grow a trading account quickly. Time is a key factor in any skill that you're looking to develop. So I think that's fantastic. So it's live markets right from the jump. Absolutely. And it gives you access to those funds. And if you move through the programs in a slower, more methodical way, it puts you in a very good position where you can also grow your account in a similar way and look at the return on investment you can do from your initial investment in the program at TradeDay to what you can parlay that to without lots of resets and increasing your cost base. It's just really tremendous. I don't know of any other business opportunity that really exists like this, where you can invest $150 or $350 for a few months and potentially turn that into a career.
Yeah. I mean that's the goal. The approach that we do see, unfortunately, there is a lot of gambling that's coming onto the platform. We can see it and we can see people rushing to complete the challenge. And I'm like, really, so we'll reach out to people on email. Hey, you're trying to scalp a market. Scalping's for professional traders who operate on a much lower commission basis with much better infrastructure and speed tools and automated trading systems. Be a bit more methodical in your approach, think about your risk management, things like that. But people are in a hurry. And if, again, outside of TradeDay, if there's anything I can sort of impart to your audience, trading's a marathon, it's not a sprint, and it takes time to acquire those skills.
Cool. Let's shift to just briefly talking about, because it's not actually readily clear from your site, that your supported platform that you started with is Tradovate, a web-based platform. Many people on the Futures Fanatic channel will be familiar with Tradovate and really like it. Advantages of, again, you can run it on a Mac because it's web-based. It has a mobile app that I don't suggest you trade on actively, but it's one that you can monitor positions and if you're online at Starbucks or what have you. So maybe you could talk a little bit about that, because that'll be a platform that people are familiar with. But do you have plans to add Rhythmics so there's more in the future?
Yeah, so it's a good. I think you really summed up in your opening question about why we chose Tradovate. It was the flexibility that it offers across Windows, Mac, iOS, Android, and its native app. It's also stable, and I come from a background, the number one priority when you're building trading infrastructure for a professional trading group is stability. You can't be in a position where you lose connectivity and the ability to cancel trades and or manage your trading engines, whether they're co-located or located in the office. It could be the death of a company. So I did some research around the space, and anecdotally it seemed that Tradovate was more stable, or certainly the CQG data feed that Tradovate runs on is more stable than the Rhythmic data feed. And then the idea was initially that we would be a multi-platform. We would meet customer demand and launch other platforms. But at first, at launch of TradeDay, we didn't want to be a support team for all these different platforms and get overwhelmed. Oh, how do I do this on Ninja? How do I do this on Sierra Charts? Whatever it might be. I hadn't used Tradovate. Well, actually, I had used Tradovate in Sim. I hadn't used it as a live account, so prior to TradeDay. So it was a case of like, let's launch with one platform that we trust, that we feel like offers the best flexibility and functionality to our users, and then we'll roll out others. Then since our launch of TradeDay, as I'm sure you're aware, but some of your audience might not be, Ninja bought Tradovate.
Yeah.
I think it's about $115 million. It was earlier in the year, and they're going through that integration now. We actually have some great news to share with you guys that it's not going to be long before we offer Ninja, and actually we're going to be in a unique position in our industry where we hope, if testing goes well, that we can offer cross-platform integration, so you can download Ninja, trade at home, and as you say, go to Starbucks and check that trade on your Tradovate, and it's all seamlessly integrated. Yeah. So that's in testing at the moment. We are, I want to say a few weeks away, but as with technology, these things you can hit a roadblock at the last.
If I could do it all over again, I'd learn to code.
Yeah.
If I could do it all over again, I don't need my Italian could suffer, and some of the other things I would learn to code, right? So that you can at least keep the coders honest.
Yeah. So yeah, we'll build out our platform to meet customer demands. And on that note as well, the idea is as TradeDay evolves, we will bring in other asset classes too outside futures. But like futures is my background, it's Steve's background, it's what we know. Let's just stick with what we know to get going and see if we can build it.
You don't need other asset classes. The futures markets are the only ones for traders. Make money in the futures markets and then dollar cost average into your favorite wealth creating assets. That's the formula, right? So use the futures for the trading component. Well, that's exciting to hear.
One more little bit on that is just that the other thing with Tradovate is it's simplicity. It's very user friendly, and that kind of appeals, particularly when we launched, because we were aiming at the beginner to intermediate kind of area, and I think there's a lot to be said for that. So I think that's one of the reasons using Tradovate, and obviously with the benefit now of you add in Ninja, and you can go cross-platform. There's huge functionality with Ninja, and you can every single bells, all the bells and whistles. So I think that's going to be a massive add-on for us.
And Tradovate, we integrate with TradingView as well. So if you
with the TradingView,
there's a huge community in TradingView. TradingView, so yeah.
That's great. So at some point in the future, TradeDay will offer a free license key or something similar for NinjaTrader, which is good to hear. Steve, maybe we can segue just briefly into your side of the house on the training side. Do you currently do your TA on TradingView? Or on Tradovate? Do you show those charts, or how are you? Maybe you could just talk us through a little bit about the education portal and the back end and everything that you guys offer.
Yeah, so I mean, a big part of what we did when we built the site originally was to have an educational, aspect to that. And so what we have in there is we have my technical analysis reports. Which come out on a daily basis, giving kind of day trade levels, day trade ideas. That's singing my own praises, but that's institutional grade. We also have then a weekly macro fundamental geopolitical update that gets posted over the weekend, giving a recap on the week, looking for the week ahead. We then have a Squawk service, which a lot of our competitors don't offer. So it's a live Squawk service. It's called Live Squawk. It's run by a guy we both met, and is a very old friend from our Cargill days. From the exchange. Harry Daniels, he runs that. He's the owner of that. He's run that for like 20, 25 years. It's one of the first Squawk services. So that's a 24-hour Squawk service. So it's a great resource. And they also have streaming feeds as well on social media. So we have that added in. And I think and then there's a host of like beginner to intermediate videos on, you know, the most basic stuff, how to place an order, what are futures, through to beginner to intermediate technical analysis. Let's James talk a little bit about the psychological side. You know, I do a lot on the psychological side. I'm a qualified counselor as well, so I kind of have a psychological approach as well to the trading. And as we've already discussed, that's super important. But we also have a series from Steve Ward, a series of podcasts and access to his book. Steve Ward is a Olympic coach. He's coached from a psychological basis Olympians, and he's also worked with numerous hedge funds, investment banks. I know we had him in when I was at Credit Suisse, pro trading groups, you know, where James came across him. Yeah. So he's a super influential guy in that space. So that's important to us to give them a recap of what's been going on. We also then look for what's coming up, data, what are the important events we're watching for, do a recap through the major news wires of what's going on. And then, my value add is really I run through the charts, and I do that on Tradovate. I'm very much of the KISS methodology, which is keep it simple, stupid. So as much as I've got a huge bank of technical analysis tools in my repertoire, for me, it's simple enough to look at trend lines, higher highs, higher lows, impulse levels, important volume levels. I also do my own analysis separately with TradingView as well. With the TradingView side, I use that in my own analysis for market charts, purely because from an editorial perspective, and I'm publishing research, it's more user friendly. So I'm using that, but I try to keep all the analysis I do on Tradovate because that's what our clients are using. So I think that's where the value really is.
How many markets do you touch on a daily basis?
I will cover gold and oil as well, because we're seeing people trade those. And then when it's pertinent, looking at the 10-year future. Not as many trading really the 10-year. And that's James. James and I came from a fixed income background in our very, very early days, but not so many retail looking at that. I will mention the yield side of things, but on a daily basis on those webinars, I'll run through, because they are the ones people are trading. I'll run through the S&P and the NASDAQ, and then touch on every now and then the Dow, because sometimes the Dow's doing something different.
There you go, everybody. That's what we call at TDG and the Futures Fanatic situational fluency, where you need to be fluent beyond your little world. There's nothing wrong with specializing in a particular market. In fact, that's probably best at TDG. If I get one of those emails, I'm struggling, I continue to struggle, I blow up, this, that, and the other, I'm like, okay, you're on Dow. That's it. One Dow, 50 cents. That's it. What's your stop loss? Your entire risk budget. If your risk budget is 300 points, you can lose 600 points and still be in the game. If you can't manage to find some profit within a 600-point window, and I seriously do put people on, I say, well, you guys send me your trade reports. Okay, well, you're trading the NASDAQ. Can't trade the NASDAQ anymore. You got to move to, and my goodness, if we could all find more people that understood how to trade the 2, 5, and 10-year more effectively on retail, it'd be fantastic. Anyhow, inside baseball.
You're absolutely right.
Yeah. All right. Well, let's go ahead and wrap it up. It's been a great conversation. So I wanted to just close with, if you guys had anything that we didn't kind of touch on, or anything else you'd like traders to know about TradeDay. And I also want to tease that I'll put in the description below and some of the post-production that we're going to be offering a special promotion to try out TradeDay. You can find out the details in the description below. But in closing, anything else you'd like traders to just know, or your closing thoughts?
I'll just lead off here, Steve. I think our goal when we set out to design TradeDay was never to compete on price. We wanted to elevate the experience and the SIM-to-funded and fund futures traders, and make sure that we build a company that's aligned with the trader. And obviously part of that, a key part of that, is actually funding people, right? Not putting them on a sim where that trader's now not aligned with the company. So we're not the cheapest, but we hope that, and certainly the feedback we're getting from traders when they come onto our platform, which is kind of along the lines, I wish I'd found you before, but we hope to build something that offers real value to traders. And that's why we're setting out with our goals with TradeDay. It's a business, we're evolving it. We are creating more products. I think this last 6 months, as I said earlier, have been a huge learning experience for me in terms of what the retail trader is looking for, more importantly, what challenges they're facing. And now we're starting to really, really understand that and be able to draw on our experience to think, okay, what direction do we want to take TradeDay in now? Or what sort of products do we want to design? Or when I say products, I mean programs, funding programs, do we want to design that will really give the trader the best opportunity possible of becoming a profitable, long-term, sustainable trader?
So I know you're very new, but
yeah,
have people made it through the program and shown some success?
Yeah, definitely. We started advertising in December, which meant that people started drifting onto the platform in January, and we funded our first traders in February. I think one thing that's really important to highlight here to your listeners and watchers is that you have to understand that when you get funded, it doesn't, just because you got through the program, it doesn't mean you're going to translate into a successful trader. There's so much work to do. And as I said, there's that sort of sim to funded drop off that we see. So everybody we've funded is not with us still. Some of those have blown those accounts and gone. And I mean, I guess that's the reason why for them that they can't.
No, that doesn't happen. What are you talking about?
Yeah, so
it's a parlay, $150 into 15 million.
Yeah, okay, just like that. So we've had people take draws. I would say they're not significant draws. I would say that's a function of us being new, and like our first traders first came on in February, and also a function of us working with them to try and grow their trading accounts so they can grow their risk, so they can grow from sort of averaging $300 a day to $400 a day, $500 a day, and then they can work through trying to get to $700 a day. Obviously, it doesn't happen every day that consistently, but you understand what I'm trying to say. It's it's a process, and part of that process, as we said earlier, is growing your trading account balance. And we've had people come on that have been successful, been funded, blown the account in 3 days, and we're like, oh my god, what happened there? So now immediately we right, okay, we need to have a call with everybody that we get funded, assuming they want it, because some people don't want that call, but we find most people are really responsive. Okay, let's have a call and set expectations. Okay, there's no pressure from us, right? There's no pressure from us. Don't think you've got to prove anything to us. Take your time. In fact, you're going to need time to cross this sim to funded challenge, right? This sim to funded psychological challenge. We suggest you start trading micros. Up to you. It's your account now. But we suggest just for the first week, trade micros, get comfortable, find your feet.
The Futures Fanatic is here to tell you, no minis at all. Yeah. Micros for a while, for a long time.
Yeah.
Okay.
Yeah.
It is beyond just the fact that they're smaller and they allow you to control risk. They actually launch you into a professional mind state from the beginning, because that's how traders actually trade. They trade with enough capital eventually to scale, to campaign around price. You have to trade the micros, everybody. You have to. I'll reference some videos right here from plenty of other good educators as well that only focus on the micros. It's the reason I got back into this business to begin with in 2019, because I had run trading and education business in every single asset class. And the ones that blew up the fastest and had the least amount of success were in the futures markets, because the futures are highly over-levered. So you do not have to be over-levered anymore. It's micros only. Sorry.
No, it's just such an important point, Rod. Yeah. It's just a really, really, really important point. And the big mistake that new traders make is they think it's about making money. And trading's not about making money. Money is a byproduct of successful trading, of a successful approach. And that you start with. Gideon, when I went into the pit to trade on my first day, he said, go in and scratch one lot, buy one and sell one, and that's it. And the next day, go in, scratch one lot, and then scratch another. But the second time, see if you can hold on to it for a tick profit. And it was like, I have a statement from my first day's trading still in 1994. It's printed in a frame in my office, and I've taken a photograph of it and put it on our website. Start small, start slowly. It's a marathon. It's not a sprint.
We started before the mini even existed. I traded the first mini on the first week in September of 97. Because I remember, because the Asian currency crisis was going on. Remember September of 1997? I remember. Our careers are really weird, because I started at Merrill Lynch also in 1994 in January, when we had a massive earthquake in Los Angeles. This is my second day in the office,
Right.
and it's 4:30 in the morning, and the building is like, all right, well, this is it. This is a sign. I'm going down. It's called the Northridge earthquakes, one of the worst earthquakes we've had in California in the last
Wow.
30 years. All right, how about Steve? Some parting thoughts.
Yeah, I'll just wrap this up with it. I thought all I want to just say is I hope that what's come through in today's chat has been that we're coming here with a genuine kind of mission to educate, impart our wisdom, knowledge, and with integrity. I hope, and I know that's kind of everyone's going to say that, but we have a real passion about this, both educating and developing, mentoring. And we're trying to just empower people to take that step. And as James says, in the right way. There's so many, and not necessarily our competition, but in this space, the broader trading space, there's so many get rich quick schemes, and the three of us know that doesn't, well, it does happen, right? And they're the ones that get the headlines, unfortunately. But for every one of them, there's 999,999 losers, right? So 1 in a million. But there is an in between, and that in between is very, very doable. It's attainable, and it has to be done in the right way. I think you have to have the right kind of mentoring and leadership and knowledge base, which we are really trying to afford the budding trader.
Awesome. Well, thanks so much for your time, guys, and for all the futures fanatics out there. I hope you got to this point. Please know that
long video.
that we're going to I'm going to drop the information down below about a special that TradeDay is offering the futures fanatic audience. Make sure you take advantage of that, because as we've discussed through this interview, this is a very different firm doing a lot of different things and filling not only gaps in the market, but really also innovating, as we've heard as well. So thanks for your time, everybody. And thanks for your time, Steve and James. Really appreciated the talk today. Yeah, and please do like, subscribe, turn on the bell notification, all the things to do. Guys, I don't think do you have a YouTube channel yourself yet? Or are you going to be putting content there? Or
Steve,
there is a YouTube channel up there. Yeah,
okay.
Not a huge amount of followers, but the daily webinar.
Very new to us. There's
a daily webinar. I'll put a link below, and I guess the
daily
best
webinars are up there. They get posted.
Okay, so I'll put a link to the TradeDay channel there as well. Go ahead and check that out. I'm imagining that since they create daily content, there'll be a lot more information on there on a daily basis. You guys are going to want to check out. All right, that'll be it. We'll see you at the next one. Stay green, trade like you mean it. Thanks.
Thank you.